First and foremost, this video I'm going to be explaining why technical analysis, why we prefer to use technical analysis over fundamental and macroeconomic analysis, why technical analysis has to be simplified, and why many people actually struggle when analysing any currency pair or market on a technical basis / standpoint. So first and foremost, this is the GBP USD chart. This is the 4-hour time frame. I'm sure everybody is familiar with the time frames now after watching the TradingView chart setup and tutorial. So as you can see, this chart is nice and clear. We have no indicators on here. Sometimes, yeah, we can throw the moving averages on. Let me just stick them on there. So we have the MA cross. So moving averages, I'll get into that a little later on throughout the sections. However, I'm just going to use these now because all of the charts, screenshots and setups in the AstroFX book have in fact these two moving averages on there. We use the moving averages to get an overall direction of the trend, more or less on the monthly, weekly, daily time frame. And we use the moving averages maybe on the execution time frame, such as the 4-hour and the 2-hour, in order to build confluence and give us an extra piece to the puzzle in order to enter trades and so forth. Now, where do we start with technical analysis? First and foremost, we have the candlesticks in front of us. Some people do prefer to use the bars. As you can see, the bar charts and the candles do differ slightly. I'll just show you the main difference. So let's take this 4-hour bar here. So we opened right next to the close of the prior bar. We spiked up to the highs and we've closed all the way down here. And then the next bar has in fact opened dead on. The reason we have this spike here is because before we closed, we did in fact come down to the lows around 1.3109. You can see the price over here. We just line it with the crosshair, 1.31079. Now, bars, yes, bars are great. It completely comes down to your personal preference. However, the preference of AstroFX is in fact the candlesticks. As you can see, looking at this same price action here, same piece of price action on that 4-hour time frame, the body is actually filled. We still have the spikes though, so the spikes to the upside, spike to the downside, i.e. the wicks, tell us where the candle, the price has been prior to that. And I just think these are much more visually in tune, more or less because I've used these from the get-go. However, I do believe dealing with candlesticks is far more sufficient in terms of judging price action reversals, looking at where huge supply and demand areas are, areas of value and so forth, rather than using the bars. And in the AstroFX book, yes, we do in fact have the 10 major candlestick formations, which I will be going into detail further on in the course. Okay, so technical analysis, what our aim is with technical analysis. So first of all, I'm going to start on the monthly time frame, as this is the highest time frame we in fact use. Now, many people often fail with technical analysis because one, they have too many indicators on the chart. Indicators such as, let's just throw some on here. So what's a Bollinger Bands is a popular one. We also have, do we have a MACD? Let's have a look from MACD. MACD, these are some built-in ones, and we have so many public library ones now on the TradingView, which basically means people are now coding their own indicators, which has been about for a while. You can go into all of the forums, Forex Factory forums, you can type in indicators on Google, and you can just see the absolute mess that there is. The reason why we don't really recommend using many of these indicators is because it steers us away from the actual price action. Fair enough if you're experienced in reading price action and have a experience in looking at the time frames from high to low in top-down analysis fashion, and then maybe layering on an indicator on top, yeah, that's brilliant because we can maybe add to a confluence. However, from the get-go, it's always great to just eliminate all of the indicators until we're quite proficient at reading the overall trend, etc. So we have the MACD here. What's also let's have a look at stochastic is a popular one. Let's have a look at the stochastic. So we've got the stochastic over here as well, and that'll do for now. So Bollinger Bands, stochastic, MACD, moving averages, maybe even people. Let's just throw it on there. RSI, for Relative Strength Index. Now, believe it or not, people's charts are actually like this at times. Now, going back in time here, we can see where the so-called overbought areas are, okay, on the indicators. And yeah, the market did fall afterwards. But this is going from a historical perspective, and it's always going to look really, really pretty going back in time. Now, this, as you can see, the more indicators we put on, yeah, we can make them a little bit smaller, but it actually just squishes up the actual price action on the chart as well. I'm using a 27-inch Mac screen right now, that's why it is relatively big, but on a general basis of any general laptop screen, 13-inch, 10-inch, maybe even 15, it can get a little bit messy. Now, the thing is with the indicators and why people fail in reading the charts to an accurate standpoint and degree is that the indicators are just overwhelming. It looks pretty now on paper, and we can make screenshots and we can say, yes, when this crosses here, we can sell and buy. So over here on our stochastic, we're in the oversold region. We're coming into the oversold region on the RSI as well. The MACD is in fact pointing down. So we've got two indicators telling us that there's a potential for a rebound soon. That's the general consensus of these indicators. I'm not going to go into fine detail because that's not what this video is about. And then we've got the MACD, which is converging to the downside, which often indicates further momentum to the downside. If we look at the actual price action, we've got lower highs, lower lows, and we can clearly see that GBP USD is in fact falling off a cliff right now. So, it's all a little bit of a mix-up. One thing I will say that we do not have any key levels on the chart right now. So with that being said, it's going to make any analysis extremely difficult to try and comprehend to see where the market can actually go. Now, GBP USD on the whole, if I can just zoom out. So zoom out, and that's all of the history that this chart's actually going to give me all the way to 1994. But since 1994, we can see that GBP USD has made new lows. We've made new lows now. This was a 2008 cycle and crash, and then we're heading, into another one right now. My projection for GBP USD is somewhere around 1.15 to 1.17, and I'll get to that on later videos. However, that's on a monthly time frame. Let's go down to the weekly. Again, weekly time frame. What actually happens is if we place too many indicators on the chart, it's the term called analysis paralysis will actually set in. Now, analysis paralysis is when you think, okay, and I've been there time and time again when I used to study on MetaTrader. Now, on MetaTrader, yeah, it's great. However, it depends what broker you're with. I'm going to break that down in another video, why we don't really tend to use MetaTrader over a professional data piece of software as TradingView. But yeah, the general gist of MetaTrader is we can create our own indicators, layer them on, and so forth. And the GMT offset of MetaTrader, depending on where your broker is, the broker server is, it's all over the place. So the actual daily time frame, the daily candlestick should always close at 10 p.m. GMT. That day is now reset, and then we'll go over to the next day. So always just bear that in mind. But the point I'm trying to get across here is I started on MetaTrader, and I've come across to professional charting software, and as soon as I made that leap, my analysis factor went up, bumped up a few notches. Now, what I used to do on MetaTrader is take screenshots of all of these indicators. I would test it on different time frames, and I would be like, okay, when all of these line up to oversold, it's going to look like a decent buy. So we have the MACD going into the oversold region, stochastic oversold, RSI oversold. However, looking at the price action, I know because, let me just pull up one of my other charts and I can just compare the indicators to, is it this one? Yeah. All right, so let's look at this daily time frame. So this daily time frame across here, GBP USD, so I've got all of the levels on and stuff. GBP USD, we've been knocking our head around the weekly, it's now resistance zone here, yeah? So as you can see, the last few days we had quite a substantial downfall, and the moving averages are getting very, very close to crossing over. If we look at this on a weekly time frame, in comparison to the indicators we see on the weekly time frame, we can see 1, 2, 3, 4, 5 wick rejections and a wick all the way up to the blue EMA, the ATMA, and we have a shooting star candle which formed yesterday, Saturday, the date of this video, I'm doing this on a Saturday, so that was the prior weekly close. I'm looking at GBP USD to continue to the downside and maybe hit our 1.27 weekly support over here. Just ignore this label, I need to update this. I've only just put these on a few hours ago. And then our other monthly support area around here, which is 1.2540, 1.2550. Overall, looking at this on the daily time frame, we have a lower high here, and this is now a lower high because this is an evening star formation. If this is the last lower high in the sequence, a lower low will form. Well, there's a 75 to 80% chance a lower low will form, so it needs to breach the lows of this wick over here. So with that being said, GBP USD, just from reading simple price action and having our key levels as accurate as possible, we can tell that there's going to be around a 280, 300 pip run on this pair to the downside. However, if we look at the indicators over here, we have oversold, oversold, oversold. Now this is going to confuse anybody who's relatively new to trading and looking for a system. The only real system out there is knowing how the banks operate, knowing that technicals override fundamentals in the foreign exchange market. We're going to go deeper into that throughout all of the videos, and also knowing to stay away from indicators, stay away from what the broker gives us, and stay away from all of the systems people program and code, because a lot of these people, they don't even make money from the market. So over here, oversold, oversold, oversold. So you're looking at these and now you're kind of paralyzed whether to start selling in this case, because okay, the indicators are telling me that there's a potential for this to go to the upside soon. Okay, so that might stop you just on this simple basic weekly chart. Okay, get ready, we could be in for a reversal soon. But reading the overall price action and eliminating all of the noise and the nonsense coming from the indicators, we can simply say, you know what, for the next week or 2 weeks, I'm going to be looking for shorts on GBP USD, and we'll see how that actually comes through. So going down one more time frame, let's just go to the daily now. So we have the daily, we're in an oversold region on the stochastic. The MACD is kind of neutral at the moment, and the RSI is kind of in neutral territory as well. So, our time frames, if we're just going solely based off the indicators, aren't really lining up. So that's why we need to eliminate those. The Bollinger Bands and all of the other nonsense, unless you're solely using and you're mastering 1 or 2 indicators day in, day out, that's great. The biggest factor, and you may have already been through this before actually taking the AstroFX course, or you may be experiencing this now, or you may not have experienced this, and you're lucky enough not to, that you may have a great indicator-based system, like yes, I'm going to buy here, sell here, a mechanical system. However, there's a chance that you may not even follow the rules. Now, a lot of systems will work, even if it's a 50% winning ratio and your risk reward is on point. You might have a 1 to 2 risk reward or a 1 to 3 risk reward. Yeah, great, you will always be on top. However, it's mindset, which is the most important thing here. So we need to eliminate all of this nonsense. I'm just going to close this down. The lower we go in time frames as well, the messier it gets. Okay, so just a heads up there while we don't use any of the indicators, because there's so many out there, there's so many different systems, and it becomes an absolute mess to our technical analysis overall. So what do we want to do with our technical analysis? Well, what we need to do, guys, is time frames are important. If you have no chart experience whatsoever as of yet, that could be a good thing as well, so don't worry, a blank canvas, is we always want to check out the higher time frames. One thing I will say is the key levels and the candlesticks are what are going to be your absolute foundations for everything else to grow and flourish on top of your analysis. I struggled for maybe 2 years because I was playing on 5-minute time frames, 1-minute time frames, 15-minute time frames. I was never really looking, and I never had a plan in place as to, okay, today I'm going to look at the weekly at the start of the week or at the start of a new day. I'm going to always check the prior day's candle, etc. to get the overall momentum. We want to read the overall momentum of a market. As you can see, the momentum on this monthly time frame is in fact down at the moment. If you run down to the weekly, the momentum's down is down here as well. Sorry, the moving averages are down on both time frames. If we look at the daily as well, the moving averages have just crossed over again here. All right, so with all of that in mind, we only ideally, so I thought this one was a bit out of whack. Let me just change that. 21, it's getting ready to cross over there, sorry. So that gives us an early indication that the daily is now going to be aligning with the weekly and the monthly, and the momentum to the downside may in fact continue. So technical analysis overall, once we've got all of our key levels on here, let me just show you this GBP USD which is being done. This GBP USD, we've got the monthlies, we've got the weeklies, and we've got the dailies of the blue ones. Now what we can actually tell is we can combine that with our candlestick formations and reasonings, and even just looking at lower swing highs, lower swing highs, lower swing highs. What forms lower swing highs are more or less reversal points and candlestick formations, which we're going to get into later on. But the point I'm trying to express here is those who are using technical analysis on a sloppy level with all of the indicators, not using time frames in the correct manner, often throw away all of the simplistic but powerful factors, your foundations, i.e. the key levels from high to low. We only really want to be using daily, monthly, weekly, and sometimes 4-hour key levels. They're going to be the strongest ones. Sometimes, yes, we can come down to an hourly time frame per se, or a 2-hour time frame, depending on the market conditions and how you want to trade. Do you want to trade more intraday, or do you want to trade more medium term? Now, as I say, a simplistic factor such as the moving averages, which can help us with our overall trend direction and bias, and maybe even the lower swing highs or higher lows and lower lows, they get removed from our minds because our minds become clogged up by the saturation of nonsense which is out there. That's why we always say, Astro Effects, you have to be a man on an island when performing your analysis. Something could look very, very good to you, like this GBP potential short setup over the next 2 weeks. However, to somebody else, they could be getting ready to buy. By all means, I could be correct. They couldn't. They could be correct. I couldn't. Why? Because I could be going for more of a 200, 300 pip target to the downside. They could be going for a buy for 20 pips, and then they could be in and out. So it's all about perspective, and it's all about learning the basics, adding all the foundations together, and then putting all of the advanced stuff on top, and constantly repeating and repeating and repeating until excellence is actually achieved in yourself. The moment you start to divert, of course, and add indicators when you don't really need to, and try to follow other people again when you don't really need to, that is when things are going to go wrong for yourself. So technical analysis, we can use this. I'm just going to show you another important factor. So when we have our technicals on the chart, often we will see these levels respected way more than any of the fundamental releases, and vice versa. The fundamental releases are more or less a mask for manipulation, which I'm going to get into in the next video. However, once we have our key levels and foundations set on in a strong manner, in a correct manner from high to low, you will see how this market really, really moves. Just putting everything else aside, if you just think of any currency pair as just numbers, as just figures, okay, because that's all it is really. If we look at the line chart, you can clearly see this is just historical prices where the GBP USD has been. That price is only constricted by figures, round numbers, like 1.5 over here. This was Brexit. A few days beforehand, the GBP gained some significant strength. I've seen on Facebook many people posting, GBP USD, it's up a few hundred pips. This is a sign that we're going to stay in the Eurozone and so forth. And all it did, it enticed people to go the opposite direction. Boom, spike straight through one of the key levels, which was predetermined and preset, by the way, and then meltdown. And then we've come into this consolidation range here, and these key levels have been predetermined and pre-drawn onto my chart as well. So the way we do things, we always want to be prepared for the future, but we always want to be aware of the bigger picture. Technicals, once we have our technicals in place and once we have our technicals solid on the chart, and we've practiced this time and time again, that's why the journal is so important, saving your befores and afters, we can then gain the confidence to say, yep, I'm going to be careful and wary of this news. However, I know there's a potential It's going to go test one of my key levels and then maybe, entice traders to go one way before actually running in the opposite direction, because the market is sneaky like that. It's very, very intelligent, and it doesn't run at random either. So currently, GBP USD is set to go a lot lower just by reading a few factors on the charts, looking at the moving averages, having the key levels set there, the rules of the key levels as well. I'm going to go into this later, but once a support level is broken, a monthly, there's a 75 to 80% chance the next weekly will be achieved. So there's certain things that we need to take into consideration and put in a bundle. People can learn a lot about a few things, however they don't really know how to combine everything. So technical analysis, I would say, is 90% of how this market works. The key level structure is highly important. Looking at the overall trend direction is highly important, and going from the higher time frames down is extremely important in this market. So if you are using indicators, again, you should have actually set your charts up exactly as mine are in the TradingView tutorial, but just bear in mind that sometimes you might have to just let go of what you've been practicing beforehand and just start anew. The amount of times I had to do that in my personal career is absolutely astonishing, but believe me, you can get there, coming back to the drawing board and back to basics. So technical analysis is the strongest point of AstroFX. We're going to be going through the macroeconomics soon and how to go around those. By all means, we have to always know what's out for, let's say, the week ahead or the day ahead. But again, technicals are going to paint the clearer picture as to where the market is potentially going to go. So just remember that. So we do not have to sit there studying all of the different pieces of data that are due to come out, because you could have just went to university and studied economics if you really wanted to get into all of that. This is the business of reading charts, reading patterns, managing money, managing your risk reward and knowing your risk reward, and having fun as well and being creative on the charts, because the moment it turns into a chore, that is when you are going to struggle. So technical analysis, that's what we're going to be going through the majority of this course, and yeah, I hope you enjoy the rest of it. So hope that was helpful.